Good morning, guys. I thought I would do a nice breakdown of how I view my chart setups and how simple it really is, so you can also start doing these chart setups as soon as possible. So a few people had requested me asking how we do these chart breakdowns. I'm like, let's just simplify the shit out of it and I'll show you. I'll show you on a blank canvas first. So basically, the first thing I do is I find a weekly time frame. So as you can see here on TradingView, you just go on the weekly time frame. It's just much easier to understand trends, or not understand trends. I don't even actually do trends. It's just much easier to understand key areas of interest. Areas of interest is where the market has gone and touched multiple times. So this is more of a consolidation pair I'm showing you right now. But if you can see here, what I would call on a weekly time frame, this would be an area of interest and this would be an area of interest. That's it. So I'm going to look at an area that's been touched at least 3 times on a weekly time frame. And then from there, I'm just going to make a little simple block here. So that's going to be the part where I'm going to most likely sell if I see that when the market reaches here, it's showing resistance or it's showing some type of rejection here. Sometimes I might even just take it, even if it doesn't, and just take the risk, and then the second it breaks out of this area, just get out. And then once it gets to this area, I'm gonna most likely buy. And mind you, this is on a weekly time frame. Very simple. So when it gets here, I'm most likely gonna buy. Now let's show you a live chart. So this is a chart you can see here. I can even make a second block here. I'm going to disregard that one, but if you can see in this area, look how many times it's touched here. Every single time it comes and touches here, it kind of falls, right? And that's a lot of pips. I'm just not a fan of this one because it doesn't show like it kind of broke out and blah, 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 whatever. So I wasn't really a fan of selling my trades. So for that reason, I'm going to remove that. But what I did here was, you can even zoom over. There's probably like so many more times it's touched in this area. I can like widen it a little bit. So you find an area on the weekly time frame where it's been touched so many times and bounced. That's it, right? From here, it came here, bounced. Came here, bounced. Came here, didn't get reach all the way there because it was on a strong downtrend, but it still came back to this area. It's like a magnetic field that's been touched so many times and it always comes back there and it bounces. Here, because it came back so strongly, it still bounced, but I guess that kind of gives you a little vision that maybe it's going to break out because it was so strong. But regardless, it doesn't even matter because it fell so many pips. It fell like 300 pips. So it was still a bounce technically going down, even though it closed so high. It was still in the range. It still rejected. It didn't do any breakout yet. And then when it finally did break out, you're going to expect that when the market comes here, now it's going to be a buy. That's it, right? So when it was in this range, it would be doing sells. And once it's above this range, it's going to be buys. And that's why every single time it came here, I was very interested in buys. And even here, this is the buy trade I actually made money off yesterday. So if you see here, last week's candle closed within this range. That was a big indicator for me that it's still a buy trade, because if it had broken out, come here, then I'd be like, okay, maybe it's going to be sell now or something, right? But because it still respected this range, it didn't close any lower, even if it just didn't break out. That's all. It did not break out. That's why it was worth then going on dailies, finding entries. Even though the dailies went a little bit lower, it didn't really matter because the weekly shows a bigger picture. It shows you that it's holding support here. So as it goes lower, I took entries in the 20s and then it flew up. I'm so pissed that I closed this trade at 50s, but if you look at it, it went all the way up to like 66, and most likely it's gonna probably even go up to here. We don't know, right? But as of right now, I'm more on the key of just making like 30-40 pips and getting out of my trades because I'm just trying to build my account up. But that's just an example of how you can see that once it comes in this area, we do not care what the candles look like. We do not give a fuck about these like Fibonacci's, indicators. I don't even care if it's a bearish engulfing candle, bullish engulfing candle. I used to give a shit about that, but I stopped caring about everything. All we're caring about is that if it holds support here and it's respecting that zone, that means that zone is still valid. So this zone is still valid. And because it's above the zone, you're going to take a buy. That's it. That's it. So dirt simple. This is another trade. This one, if you look at it, I know the zone looks a little bit messier. Like if I actually stretch it out a little bit. It's a little bit messy because there's times it's above it and below it, and like, someone might be like, oh, why isn't the zone over here, right? Fair. But the reason I moved it down here is because I felt like I'm going to look at also the recent activity. The recent activity was that it kind of broke out, right? And then it came back and retested here. So it held support here, or sorry, it respected this resistance zone. And then this was another big indicator to me as to why I took this sell. So when I saw that this weekly closed lower, right, I'm confirming that the trend, if you look at it, is overall still going down. So once it came back anywhere in this range, and because this is a Swiss pair, there's not that many pip movements. So then when it got to like 80, I just took another sell. And now if you look at it, it came back to 60, but it has fallen quite a bit. It fell all the way up to like, I think like 51, right? Yeah, I took some profits here. So I took about 30 pips profit. I'm letting some of my trades run. To be honest, I'm trying to limit myself from entering too many trades. So I'm like, I'd rather just keep my good entries at 80 and hopefully let it fall to at least 40. And if not, it could even fall all the way up to here, right? So I prefer now just holding my trades a bit longer, but I do take half my profits and let half of them run. That way I do have locked in profits. And then if you look at another pair, oh yeah, this one was really, really good. So this was a pair I actually caught yesterday. So same thing. This is a zone. I made here because it's been respected more than 3 times, right? So if you look at it, first it came here, retested, broke out, resisted, broke out, retested, right? It's just like an area that's been touched many times. That's why you need to learn. Eventually, as you start practicing this, you're going to be able to pick up on these zones better. Like even with this, you might be like, oh, why isn't the zone up here? I just made it here because I'm like, that is like a kind of that would be the next breakout zone. Like if I wanted to clone this, let's do, yeah, there. I could make one up here, right? That's just another zone, but I just don't care to make too many zones. I usually just make maximum of 2 zones hovering around where the price is at. So I'm going to look at the high of it and the low of it. That's it, right? So this is a zone below it and this is a zone above it. And so what I see here is like, I'm not going to go all the way up. There's nothing, I'm not really going to get anything out of making the zone all the way up here. I'm just going to keep it limited to just like as close to the price as I can, and that on a weekly zone. Sometimes it's not close to it, and then that's why those trades are just in my not watch list, right? But this is a trade that was of interest because it came back to a support area. So if you look at it, it came here, support, it held support here, resisted, then came back for a retest. It broke out here, but it resisted. Like it is a strong area that most likely is gonna hold some type of support. And then when I broke it down on daily, this gave me extra confirmation because I'm like, wow, look how many daily candles held support here and they were not able to break out. Even though this daily candle made a bearish engulfing candle or whatever you want to call it, I still took the risk of it because I'm like, the second it came back into this range, I'm like, you know what? I'm going to just take the risk of doing the buy because the weekly did not break out from it, right? So there's a high chance that it's still going to bounce up and most likely come all the way up to the next zone. The next zone is all the way up here, right? So I only just made about like, I think I took entries I took an entry at 40 and I closed it around 80. So that was about 40 pips. It's still going up. And then you just got to consider that when you look at it in daily, this is an area, so that's why it's kind of holding a little bit of support here now. But that does not mean that that's where you take entries or anything like that. It's just giving you just like a little bit of examples of where you can exit your trades. Like this was the first area you would exit because look, it held a lot of resistance here. Next area is here. Next area is here. But the weekly zones are the ones that are very, very valid. And those are the ones that actually show you the whole bigger picture of where the market's headed. So when I push this back into weekly, those dailies don't even matter. It's heading all the way up here, most likely, right? But that's why, because it's never guaranteed, I personally prefer just making my 40 pips and getting out. I feel like it's much easier to grow your account that way, especially if you have a smaller account size. And then as you start growing your accounts, you can hold trades for longer. Some people hold trades for weeks. Some people hold them for days and then go forth with it. But hopefully that's easy to understand for you. I don't use any indicators. I don't use any type of like hammer candle, morning candle, or whatever the hell people used to call all that stuff. I studied all of that stuff. I read everything on babyhips.com. I read so many books. I watched so many videos. And after just understanding, and honestly, I give a lot of shout out to Nick Sean, but after watching a lot of his videos, the simplicity of it is what helps you become a better trader. You don't need to make it overcomplicated. You just need to find the strong weekly zones near where the market is at right now. And then whichever pairs are lining up closest to the weekly zones, that's why I only have about like 7 pairs here that I was interested in watching from like almost over 20 pairs, is just find the ones that are closest to the weekly zone and take the risk. Just take the risk that when it comes here, I'm going to take the risk of sells. And when it comes here, I'm going to take the risk of buy. That's it. Super simple.